Hey traders, this is Ron Haydett, Market Tamer. Happy Tuesday. Hope you guys had a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves a risk, and specific financial issues should always be addressed with your financial advisor. We're going to kick off here with the SPY up a whopping 19 cents. The Qs up a whopping 64 cents, about 1/3%. The Dow was about 1/4%, up 72 cents. Bulls still get the edge, but what really today was about is earnings and just flat out big news. Let's start with Netflix first. And if I pop the panel open here, actually, you can see as of 5:25 p.m. Eastern, its last price at 4 p.m. was $3.59, but now in aftermarket 5:25, it's $3.55. So we're down, $3-4. It's going back and forth right now. Netflix is saying that subscriber growth is going to slow down. Doesn't seem to be a big shock to me, and I think that's why the stock itself really isn't moving much. So it's going sideways. There was a little bit of dip here on the Disney news, but if it takes out this 380, 385 area, then the double top up there, almost at 4.25, would be the target. All in all, Netflix is holding up quite well. Now, a lot can change by the time tomorrow comes around. If the market rolls over, selling starts kicking into Netflix, we could easily see a big day to the downside. But right now, it's holding its own. If we take a look at IBM, and I'll go over here and type in IBM as well, close the day at 145 as of 5:26 p.m. Eastern, it's down like $3. So if I zoom in, IBM is trading right around 142, which would be right about where my cursor is, ballpark. So we're a little below the red line, 20-day EMA right now, but we're still well above the 50. And for something like IBM, I would use the 50-day institutional moving average as a litmus test. And if we get below there, well, not only have you lost the 20-day in red, now you lost a 50-day institutional. The 200 becomes the target, then you come to the gap up from last earnings and then down to a gap fill. But right now, a couple dollars down, not bad at all. How about health stocks, healthcare stocks? UNH. So I'm going to put this over to the side now. If I zoom in here, this stock gapped up to nearly 240 and then finished at 220. $20 reversal, finished down $9 or 4% on the day. It just did bearish engulfing over the bullish pattern yesterday. This is not a good sign, even though they raised guidance. But healthcare stocks across the board got creamed today. If I go back to 2 years on UNH, there's more support at 210, about $10 lower, another 4%. Then you come all the way down to 190. And then, there's really no major support in here. Not saying that's where we're headed, but look at this steady uptrend. 2017, 2018, once we get below the 200-day, we get back above, and all of a sudden, lower highs start setting in. This is why puts for earnings can save a trader's bacon. But that's not just what UNH did. Check out Cigna. This was down almost twice as much, 7.8%. Their earnings report, according to Thinkorswim, is still not to the 2nd of May. This thing annihilated previous lows. I'm going to have to go back and do 5-year weekly charts. It's going to have support 140 down to 120. How about Humana? This stock lost 18 bucks, 7+%. On the weekly chart, it's coming into the 200 period. There's a little bit of support there. Otherwise, you can make an argument and say the 170s. Now, if I switch this, let's actually just go to a daily chart and I'll zoom in. If I zoom in on the daily, you can see the damage that was done today in Humana. Earnings, not until May 1st, and they're getting beaten right now. Watch, I'd say, maybe $5 lower today, below there. Then you start coming all the way down to the 190, 200 area. But here's the thing. Even though these stocks are starting to get, really sold off from their highs, zero is always a possibility. But with these earnings reports, I would still want to put walking into this report because you just never know what could happen. Now, HCA Healthcare, this was down 10% today, $12. This is a daily chart. If I zoom in here, there's gap support, 4% lower, right around 110, and then you sort of have to come down into the $95 area. How about Tenet? Lost 11% today. Gap fill almost there at 25. The next major support down at 1750, which were the lows right there at the end of the year. Tenet's earnings report, according to Thinkorswim, 429. So again, these stocks are getting beaten up. I still think puts are warranted from my personal experience because you just never know. But with today's big down move, the implied volatility is going to be rising. Another thing, just as a helpful hint for the next earnings season, if you're trading Walmart and Target, let's say, or Chevron or Exxon, or healthcare stocks, UNH, Cigna, Humana, HCA, Tenet, the list goes on and on, the first one to report, it might be worth considering buying puts on the stocks that aren't even about to report, because if one of their brothers or sisters reports and that stock gets beaten, all the rest fall in line. And that's exactly what we're seeing today with these healthcare stocks. All right, Johnson & Johnson. If I zoom in here, you can see it came off the highs. 140 still remains a marker. We break 140, 147.50 is the target. Came off the highs on its earnings report below the 200-day, which are the lows just from about 5-6 days ago. We break that. Oops. We get below that 135 area, then we come down to about 127.50. Here's WDC. I was hearing some different commentary on it about maybe it being potentially bullish, whatever. But what it did today, it cleanly, on a rise in volume, broke above the 200-day moving average. Upside targets, I would just go to swing highs. There aren't really any major ones until the ledge was broken at 75 bucks. That's 50% higher. There is no chance in heck I'm saying the stock swung 50% higher. But from a technical resistance perspective, that is where the ledge was. You fell off the ledge and down you went. That's the target. Now, the company does have earnings according to TOS on the 29th of this month. And how about Apple and Qualcomm? Apple was up a whole 2 cents today. They have their earnings report coming up on April 30th. But Apple and Qualcomm reportedly have settled their patent dispute. While Apple didn't move, check out Qualcomm. Not a bad day to be a shareholder of Qualcomm. It's been a tough road for the last 5-6 months, but the stock shot up 23% today, up $13 on what I would call mega volume. 84 million shares when the average is going to be somewhere down around 7-8 million, something like that. That's a whopper. All right, have a great day, everybody, and I will see you in the next video.